Minnesota. This is Christie Thompson with Christie Legal. I am a divorce and custody mediator and paralegal here in Minnesota. And I am with a panel of other professionals who you need to also know when divorcing, because there is a lot more to divorcing than just the legal work. And today we are focusing on folks who are in the military or who are veterans of the military, because there are some special situations for those folks. Plus, of course, we'll just be talking about the normal stuff of divorcing and separating. So, panelists, if you guys could please introduce yourselves in alphabetical order, first names.
Hi there, I'm Cathy Hietala. I'm a financial advisor. And one of the areas I like to focus on is military, because I come from a long history of military. My son has been in Army National Guard for, 12, 13 years. My father served Army. My stepdad served in 2 wars, and my nephew served in Iraq, and my brothers were both Marines. So I just want to be able to give back to those that have given so much for us. Thank you.
All right, and I'm Dave Jamison with Rainbow Mortgage. I'm a 9-year National Guard veteran myself. I was in during the lull. There was no wars when I was going on, so I pretty much spent all of my time stateside. Actually, I spent all of it stateside, but was in the Hastings National Guard for 9 years. And we specialize in helping clients that we kind of handle both areas of the situation. We are divorce and mortgage specialists, so we help people going through divorce with their mortgage and real estate needs. And then we also specialize in helping veterans, either with purchasing a home, refinancing a home, and just making sure veterans get the best deal that we can get them. Dave Jamison, Rainbow Mortgage.
Hi, good afternoon. My name is Ken Colston. I am a realtor and real estate broker with Market Fare Realty, serving both Minnesota and Wisconsin. My background is primarily military. I served in both the U.S. Marine Corps and the U.S. Army, was one of the Operation Enduring Freedom vets in Baghdad, Iraq. I have a special place in my heart for serving in a new way, and just helping out with veterans and family members of vets within their real estate needs. And then I have experienced divorce through my first marriage, and so I completely understand the trials and tribulations that are incorporated with the process of divorce. So I have also a special place in my heart for helping people who are experiencing that process, and just kind of helping them get through that and making that transition as easy as I possibly can for them. Thank you.
Hi, and so my connection with the military is not nearly as awesome as Dave and Ken's. I grew up as a Navy brat. My stepdad was in the Navy, and I was a child of a Navy guy from ages 6 to 18. So I lived on all sorts of Navy bases and even an Air Force base, not sure why that was. And got to drive my car on the base and think I was pretty special because I had government clearance on my vehicle, and shop at the BX. And so that's my experience with the military. Nothing nearly as cool. And so a little bit about divorcing on the legal part. So when you divorce, there's 3 main issues that you're handling: the division of assets, the division of debts, and if you have kids, what are you guys going to do with the kids? So division of debts, the rule of law is that the parties divide the assets 50-50. Unless one of the parties hasn't been working for a long time or is disabled. Therefore, that person has a lesser ability to earn in the future. And so the courts, the laws state that they have a right to more than 50% of the assets. And when we talk about 50% of the assets, what we mean is we are going to take all of the assets, so that include the house, maybe a rental property, the vehicles, all the financial accounts, the household goods, jewelry, collectibles, everything. And we're going to put them in a pot and we're going to add up all their value. And then each party is supposed to walk away with approximately half of the total value. Now, the only assets we're dividing are the marital assets. What a marital asset means is an asset that was accrued during the marriage. And so there's one slight exception to this, and that is when just one of the parties owns a home and the home was purchased before the marriage. Then the person who's not on the title to the house has a marital interest in the non-marital property because there's an assumption that that person helped, with the upkeep of the home, paying the mortgage during the relationship. So, but, overall, you divide the assets 50-50. And it doesn't mean that you take each asset and divide it in half, because that's not even possible for a vehicle. And so you're going to meet with a real estate agent. You're going to find out how much the house is worth. And then you're going to talk to your financial advisor to find out how much your financial accounts are worth. Or you could just look at your statements as well. And we're going to, create a tally or a list of, who has what. And then we're going to look at the bottom and see how uneven it is, if it is, and then we're going to make it more even. And so that's how the division of assets works. And we would start from, what is most important to you. So if you really want to stay in that house because you really love that neighborhood, or, you don't want to move the kids out of the house or whatever, then we'll try to get you as much as possible of the equity in the home. And then there are the division of the debts. And the rule of law in the division of the debts is ability to pay. So what that means is who earns more income. So whoever earns more income is going to be responsible for more of the debts because that person has the greater ability to pay. And folks, it does not matter who created that debt, because this is a huge misconception, especially amongst younger folks. Even if you keep your assets separate, when you are married, you are legally one person, financially and for contracts and all that kind of stuff. So if, one party went out and got $50,000 of credit card debt, guess what? The other party is still responsible for that based on the comparison of the incomes. And of course, if you folks agree to waiver from these rules of law, you can do that when you are being amicable about the divorce. And what being amicable about the divorce means is that you guys are working together to reach agreements on everything. You have not served the other party, and you are going to write one set of joint divorce documents. So by keeping it amicable, you guys can, fudge a little bit on the rules of law because you are both agreeing to fudge on the laws. However, if you lawyer up and you're fighting it out, in all likelihood, you guys aren't going to be doing anything other than sticking to the letter of the law. And then with the children, there are two types of custody. There's legal custody and physical custody. Legal custody means who has the ability to make decisions about the child. And those decisions would be medical, dental, psychological care, education, and religion. 90% of the time, both parents have joint legal custody. It's very difficult to not have a parent have legal custody. But we can definitely talk about situations when that would be a good idea. And then there's physical custody, and that means where the children physically are with, which parent. And there are a lot of different ways to do that. There could be joint physical custody. That means the kids are with each of the parents half the time, or approximately half the time. And That works well when both parents are very available to parent, and they're getting along fairly well and co-parent fairly well. And then there's what's called sole physical custody, but that's actually a misnomer, because nobody solely has custody of a child because there's another parent. But sole physical custody just means that one parent has more parenting time with the child than the other parent. And there's lots of different percentages based upon each parent's availability to take care of the child, their work schedule, perhaps their social life as well. And there are lots of different parenting time schedules. And that's something that we would definitely talk about when you folks are mediating, because parenting time schedules, what works for each family is very different. And so we would talk about you guys' work schedules, and basically that would be the starting point. And so that's a little short rundown of all the legal stuff. And so now let's start talking about the property in more detail. And let's start with Ken. And Ken, if you could first talk about, if they aren't going to keep the house and they need to sell the house, and then talk about if they're going to buy another house. Thanks.
Yes, thanks, Christy. So yeah, the initial process would just be about whether if one party is going to keep the house and have the other party buy them out, or if the way the divisions of asset occurs is the necessity for the home to be sold. And then I guess there's probably a third tier in there where maybe just some of the memories of being in the home, you might both feel like you need to start a next chapter of your life. So you're selling for that purpose of just being kind of making a clear cut and moving on with next chapters. In the last two situations where the home is being sold, that's an area where I would step in and help facilitate that process and getting a home listed for market. And then there's a secondary piece there where if either one of you or both parties of you are going to move into a new home, and right now there's definitely an increase in buyer demand and a shortage of inventory. So one of the interesting dynamics about the current market situation that we're in right now is that you might have additional proceeds coming to you from what we've been experiencing over the last number of years. And the flip side of that is that when you go on the buy side, it is a competitive market. And so you might also be using those proceeds, the majority of those, towards your next purchase to be competitive in whatever it is that you are purchasing. Sometimes when we're in a situation where it's a high buyer's market or a high seller's market, that dynamic is beneficial. Like currently for right now, it's a seller's market. And if you're a buyer and you don't have anything to sell to take proceeds from, it's a little bit more strenuous in that process and advantageous for a seller. The opposite of that is also true in a buyer's market where buyers have beneficial. So what we have often happen in situations where couples are divorcing and moving on to the next steps and repurchasing, they are a bridge to that gap between buyers and sellers, because you are often staying within the same general location, and you're bridging that process between receiving more funds and paying more, or receiving less funds and paying less. So it's you're kind of the balancing piece of any market. I see a question there. Let's see.
Oh, okay. I will ask the question right now then, Ken, since you noticed I typed that, and I'll see if you know the answer. So a lady messaged and said, that's what I am facing now with my ex-husband. He is taking me to court to sign a non-warranty deed. I think maybe she might have been referring to when I was talking, I think, about a marital interest in non-marital property. But I haven't actually not heard of a non-warranty deed. Ken or Dave, have you heard of that? And
Um, so let me address, one of the things I was going to mention today was the necessity that happens sometimes for what's called a quitclaim deed. And so for example, I have had clients before who, let's say they bought a property that they bought as a single person, then they got married and they kept that property, got a divorce that wasn't addressed specifically in reallocating of assets, maybe just through like a peaceful agreement, like in a situation like where you, Christie, help people facilitate. She might have said, well, he had that and I don't feel like I have any rights to it, so she just let it ride. And then he remarried and then later wanted to sell that property as a to take proceeds from that to buy another property with his current wife. Well, in that situation, his ex-wife had to sign a quitclaim deed, and she was remarried, and her current husband also had to sign a quitclaim deed that is relinquishing rights to that property. So that is what a quitclaim deed is, and a non-warranty deed is essentially a secondary term for a quitclaim deed. So so I think if I understand her question correctly, is basically that her husband had property that he had before they were married, and now that they're divorced, he's asking her for him to sell that without her taking on allocation of asset from that.
okay, yeah, I've never heard non-warranty deed before, so I was like, okay, maybe my real estate guys will understand that.
Dave, do you have anything to add to that?
Well, the one thing I didn't hear if she was already divorced or not, but in Minnesota, you cannot quitclaim your marital interest off of a property. So a lot of lenders and divorce attorneys will have quitclaim deeds and they'll try and present them before the divorce is final. And they can certainly do it, but they're not even worth the paper that they're written on. So in Minnesota, you cannot. So if the client, the person who put the question in, if you're still married, the non-warrantable deed or quitclaim deed is not going to be valid anyways until your divorce is actually done.
Yeah, she is divorced. And so, yeah, now it makes, complete sense. He must have gotten ownership of the house and the divorce agreement. I just had never heard non-warranty deed before. So
And sometimes it depends on what he's doing, because a lot of the divorce decrees that I read, the divorce decree can actually be submitted to the court, to the county, to take the other party off. So if the divorce decree is written properly, it can say that you're supposed to do a quitclaim deed or provide a summary judgment of real estate. And if the person doesn't want to play ball, then this divorce decree can be recorded to remove the people from the title.
Yep. Thanks, guys. And Ken, do you have anything more that you'd like to tell folks about buying a home? Are there any, for instance, special home buying programs for military or veteran folks? I've heard of a few. And what of those do you participate in?
Yeah, so particularly with in terms of, and Dave can talk a little bit about this too, with him being the mortgage specialist, but essentially the VA has a specific type of lending available to anyone who is a veteran, and some of that is extended into family members who were married to a veteran who was killed in service. The VA funding allows for buyers to come in with no money down, which is a really great opportunity to get in a home. That being said, the market right now is particularly tight, and sellers are often looking for buyers who have the availability to put money down. Now, that doesn't necessarily harm a VA buyer from purchasing, but it definitely helps if the veteran also has some capability to make up the difference in between what a home sells for and what the home appraises for, in the incident that the home doesn't appraise for the value of the loan request, or that piece gives buyers who are buying under conventional terms that may be using a 20% or a 10% down and having some mortgage insurance payment in addition to that, gives those buyers an opportunity that they can use some of their funding towards the difference and take a higher loan if they're qualified to do so. So the VA buyers can also operate under that same example. It's just that they do have the rare capability of being able to purchase with zero down. There's also some funding fees that are associated with the veteran buyers that the VA does to help kind of protect homes that from going back to the bank and foreclosures and things like that. There are some programs like Homes for Heroes that definitely allocate some portion of the proceed or the commission structure back to the homeowner. I am a participant in Homes for Heroes, and that's a program that's available not just for veterans, but also to firefighters, police officers, emergency service technicians, things like that, people that work in realms of there's also ones that are available for teachers. If you're a teacher, I believe there's some that are available to medical professionals like nurses, respiratory therapists, etc. as well. Yeah, so thank you for asking that question.
Awesome. And so let's move over to Ken then. Dave. Dave, could you please tell us about mortgages, and specifically mortgages for people who are military or veteran?
Yep. So like Ken said, the loans for the veterans are super nice because there's zero money down if you're going to purchase a home. And what's also nice is they can, if they're going through a divorce and they have to pay their ex-spouse, they can go up to 90% of the value. And it's considered a cash out refinance, but conventional loans are capped at 80%. There is a way to go all the way up to 95% with conventional loans, but we're talking about veterans today. So about they can go up to 90%. Now the key on that is, depending on your situation, the funding fee has to come out of that 90%. So if you're using it for a second, third, or fourth time, the funding fee is 3.6%. So technically, you can only get 86.4% of the loan of the value to do cash out. Another nice loan that a lot of veterans don't know about is the interest rate reduction loan. And that's a super great program. So when rates get lower, like they are right now, there's no appraisal, there's no income. Basically, we get about 4 pieces of information and we can refinance the house for the veterans. They just have to, they cannot have taken out the loan within 210 days, and they have to get at least a 0.5% reduction in interest rate. But it's like one of the sweetest. I love doing them because it's just a true benefit for the veteran, and we can get them done super quick for them. So that's a great program for the veterans, is to be able to do the interest rate reduction loan. And sometimes, so one of the things about that, when people are going through a divorce, is they have, so let's say that I was divorcing my wife, which I'm not, and I wanted to take her off of the loan, and because rates were great, and I knew we were getting divorced, and I wanted to take her off the loan. Can't do it. The VA specifically says that everybody who's on the loan has to stay on the loan unless one of two things happens, death or divorce. So we actually, to be able to do an interest rate reduction loan, the person actually does have to, you do have to be divorced to be able to qualify for an interest rate reduction loan. Now with those, you cannot get any cash other than your closing costs. So that is you get like $400 or $500 is the maximum that can come back to the veteran on an interest rate reduction loan. What else did you want to know, Christy, today?
Well, thanks for being so accommodating. So if you could talk a little bit about debt to income ratio, because a lot of my clients, they say, I'm going to take over the house. And then I ask them what their income is. And then I ask them what their current mortgage payment is. And then I say, would you like a referral to a mortgage banker?
Yeah.
So could you explain
There's
that?
only one, Dave. There's only one right here. That's the one you refer them to. So sure, I can talk about that. So just kind of to give everybody who is watching or does watch this, a good general rule of thumb is you want to keep your debt to income ratio at about 45% max. And that includes all of your car payments, your student loans, your credit cards, your housing payments. The maximum I'd like to see people is 45%. I prefer to see them lower, but if that's what we need to do to be able to get them in the house, we can do that. Important thing to know is that if you are going to receive child support or maintenance, to be able to use those to qualify for a home loan, you have to receive them for 6 months before we can use it. And it has to continue for 3 years from the date of the loan, not from the day that your divorce is done, but from the day that we do our loan. So for example, you get divorced today, you wait 6 months, it's October. And if you had 3 years from October, you'd have to close in October. If you close in November, you're already not going to qualify for the loan. So when I look at divorce decrees, I'm usually looking for about 4.5 years, so that gives the person who's receiving the support enough time to receive it, and then enough time to find a house or refinance the current house that they're in. One other thing that we talked about that we didn't have time to talk about last month was authorized user accounts, which can affect that income ratio. So not every credit card or car loans are always joint, but not every credit card is a joint credit card. Sometimes you have a credit card where you're just an authorized user. And this can be a benefit and it can be a drawback. How it can be a benefit is if that card is paid off every single month and you have limited credit to begin with, and you're an authorized user, that history is helping your credit score and helping you qualify for the loan. Once we take that authorized user account off, you lose that credit history and your credit score could drop significantly once that authorized user account comes off. So pros and cons there. The other side of it is, let's say that you're an authorized user and that card is maxed out and you're having a hard time qualifying for your loan. Well, then we would probably take the debt out and have you get removed as an authorized user as opposed to leaving that on your account. So there's pros and cons to the authorized user accounts. You just have to, like Christy said earlier, you want to talk to a mortgage professional like myself to evaluate it and see, does it make sense to leave it on? Does it make sense to take it off? And then I'll leave you with this last tip about debt to income ratio for this month. So every lender we all have a set of rules that we all have to follow, okay? And you can't go lower than those set of rules, but you can make the rules harder than what the base set of rules are. And there's some big companies in town that don't like divorce, so they've set the rules fairly high. And one of those rules is that if somebody gets divorced and the debt is assigned to the other party, technically I don't have to count that debt against my client who's trying to purchase a home. So for example, there's a car loan for $500 a month and that debt gets assigned to the ex-wife. A lot of the big banks will say that car has to be counted because technically, even though the divorce says your spouse is responsible for that, you're still technically responsible. So you have to count it in the budget. And that's certainly within their prerogative to look at the rules that way. However, there's a rule that's called the contingent liability in the guidelines that says if it's assigned to another party, then we don't have to count it in their budget. And so a divorce decree assigns the debt to the other person. So a lot of times that's a way to get the debt to income ratio removed. And what I recommend anybody who's watching this video, or even Christie and Ken and Cathy, is if you're looking at divorce decrees, one of the biggest challenges that I face is when divorce attorneys don't itemize the debt. They don't assign it to the parties. They'll do, a lot of times I'll see it where it says the Toyota is Christie's responsibility, but I don't know what debt that is. It says so what I recommend anybody who's looking at divorce decrees, going through divorce, make sure that the debts are itemized and assigned. A nice little spreadsheet that says Toyota payment, $500, Dave. Honda payment, $200, Christie. And you just go through every single debt that way. That way there's no confusion because the underwriters don't know what loan goes to which. And then it just makes it harder to qualify people down the road. So make sure that those debts are getting assigned. And then before you do anything with your credit, always contact your mortgage professional to make sure that you're not hurting yourself when you think you might be helping yourself. So that's all I got today.
Wow, that is incredibly amazing that a divorce decree would be written in a vague manner, because that's way too much vagary. Yeah. And I do have another question for you. If you have, say, co-signed a loan for your child, say for student loans, is that going to be counted as your debt when qualifying for a mortgage?
Yes and no. Depends on where they're at. So if they're still in school, absolutely it will count in your debt to income ratio because there's no payments being made. Once your child graduates and you can prove that they've made 12 monthly payments out of their own checkbook or out of their own bank account, then you don't have to count that debt in your budget anymore. So same goes with like let's say, Ken's self-employed, right? He's a realtor. He's got a car loan, but maybe the business pays that car loan. He doesn't write it out of Ken's personal checkbook. He writes it out of Ken LLC checkbook. Well, once I can show that Ken LLC has made that payment for 12 months, I no longer have to count it in Ken personal debt to income ratio. But it has to be 12 months, has to be proved that it. So I've had like 3 of these recently where self-employed people wanted to remove a truck payment because they just went and bought a truck. And they showed me that they just took out the truck payment like 6 months ago. They've made all 6 payments, but it's not 12. It has to be 12. I tried it with all 3 FHA convention in both Freddie and Fannie, and it requires 12 monthly payments. No exceptions on that.
Wow, that is highly valuable information. I've never heard that before. Not that my business pays for my car or any of that, but thanks very much.
You need a new accountant then.
Yeah, right. So now, Cathy, could you talk to us about financial assets in general and financial assets that a lot of military and veteran folks have?
Yes, I want to thank you all for some wonderful, informative facts there. But to start, I want to start by mentioning a couple things that military personnel should look at whether you're going through a divorce or not. And one is your TSP, your thrift savings plan. You do have an option when you leave the military to roll that into an IRA, but you don't have to. So know that you don't have to roll that over. That can stay in your TSP. TSPs were set up with low fees to help our military. When you roll it over outside of a TSP, you can incur higher rates. One, you're probably going to have an advisor that's going to charge you a fee. Some of those can be exuberant, some are good. You could also have like mutual fund fees. That could be 6% just to get into the mutual fund. You can have fees upwards of over 2% per year on top of that. So you could be losing 10% your first year by rolling it out. And there are better options, but it's something to look at. Know that you don't have to roll it out. The TSP was set up for our service members to protect them, and they're good plans. Now, if you're looking at putting an annuity inside of your TSP, like a fixed indexed annuity to give you income, added income in your retirement, then you may want to look at an outside plan, because options are limited in annuities in a TSP. Outside plans can offer extra things like a family income rider that will give a family member that income if you pass away. A doubler, if you need long-term care, it will double your yearly income for 5 years. It can give you upfront bonuses. It can give you rate lock. So if we're in a high interest rate, you can lock it in rather than taking a chance that your anniversary date will land on a high note. And Roth options, where you can carry a Roth and a traditional. You can do a conversion right inside the same annuity. So just different things that are important to know and look at. Now, if you're going through a divorce, we want to make sure that you know what could happen before you get into that divorce. Know that your TSP can be frozen. So if you need to pull money out of that, we all know that a divorce could take up to a year, 2 years, unless you're working with Christie. She's efficient and will get it done for you. But if you need money to pay your bills and you're taking money out of that TSP, you may want to take money out before you head into that divorce in case it gets frozen. Also understand that you'll be taxed on that money, or potentially taxed, and it could be penalized if you're under 59 and a half. So just do your research before you head into the divorce. I also want to touch on what's called the 10-10 rule. There's the Uniform Services Former Spouse Protection Act that was created to protect spouses for retirement, but know that it doesn't guarantee that they can have access to your accounts. The 10-10 rule says that you have to have been married for 10 years to each other, and you have to be in the service that qualifies or that's creditable toward your retirement for the same 10 years that you're married in order for them to have access to your retirement. And there's a few other rules. So know that they don't automatically get that. And then also understand combat pay. If you're in a combat zone, the federal government excludes you from paying taxes on money that you put into your TSP while you're in that combat zone. However, the growth on that can be taxed. So say you put $50,000 in while you're in a combat zone. Now, over the years, we've had a good market climb, and you have $100,000 in there. That added $50,000 can be taxed. And then depending on the state you live in, the state can tax that. So it's just the federal government side that exempts you from the money you put in while in that combat zone. So just during that period. So if you're giving part of that away to your spouse, know the taxation factor. So you're not only giving your money to your spouse, but you could end up paying taxes on the part that you're giving away. So make sure you factor that into the equation. And then also, I think it's important to know that a quadro, your qualified domestic relations order, does not go towards your TSP. Even if it says the quadro set up for all your retirement plans, it doesn't go towards your TSP. That has its own set of rules that has to be developed. So, and one last thing is beneficiaries. Make sure they are on your accounts, they're up to date, because if you pass away during your divorce and there's no beneficiary assigned, that will go to your spouse. And now after the divorce, but beneficiaries will come before a will or a trust. So beneficiaries, you know, that is like the rule of law. Whatever you have as beneficiary, that's where your money's going to go. So make sure you have beneficiaries listed so that it goes to the people that you want it to go to. So bottom line, there's not a lot of differences between getting divorced while you're in military and not, but the differences that are there are big and they can be detrimental. So reach out to a professional, make sure that you're educated before you head into the divorce. And I'm always happy to help out for a no-cost consultation to help out those that have helped us. Thank you.
So Cathy, thanks for all of that information. And the first time you told me all those things, I was like, oh my goodness, I had no idea, which is why I refer people to financial advisors. So a question for you, could you talk about how if during a divorce, folks decide to divide their retirement accounts, both the IRAs and the 401ks? I know that when you divide an IRA, you don't have to have any special documentation, but what happens when you need to divide a retirement tool such as a 401k?
401k, that's where you get, whether it's a quadro or the military version of it, that the court says you have to split up this asset. When you split up those assets, one thing you want to do is you want to make sure that it's a transfer of assets from the one account to the new account that the spouse or ex-spouse will be setting up. Don't draw that money out. If you draw that money out and hold it too long, you can be not only taxed on it, but penalized on it if you're under 59 and a half. So if you do a direct transfer, it's super easy. It's a piece of paperwork. It transfers it from one account to the other, and there's no worry about taxation or penalties. Can be done super easy.
Awesome. And can you also talk about what happens to people if they take money out of their retirement funds before they're allowed to by law? For instance, I've had some people who wanted to, they said, you know, I'm going to get half of my husband or wife's retirement account. I'm going to get $100,000 and I'm going to put that $100,000 down on a house. So what do you have to say about that?
Right. Yeah. If they're under that age 59 and a half, they're not only going to be potentially taxed on that money, but can end up paying a 10% penalty on that money. If it's in a simple plan, simple IRA, you could be taxed up to 35% on that money, depending on when the money was started. Simple plans have a 2-year rule to them. So there's different rules on, it really depends on what type of account it's coming from, but it's always good to look at that, look at the penalties, look at the taxation before making that decision, because you just don't want to be surprised in the end. You want to make an educated, informed decision. That's what we're here to help you with.
Exactly. That's why we do this Facebook Live event once a month, is because we want you to be able to make informed decisions when you're getting ready to divorce or separate. And we also want to be able to help you after the divorce. Of course, I'm not involved in that. However, Ken, why don't you talk about how you help people after divorce?
Yes, so after the divorce is when, you know, once everything is finalized, you can then kind of free and clearly move on to purchasing your next property without having to worry about the impact of your previous significant other being involved or engaged in that. And that's when the home buying process really kicks in. We certainly are able to help facilitate you through the home buying process. If you have already owned a home, you may be familiar with what that kind of entails, but it usually starts with us meeting, having an opportunity to kind of figure out what your search criteria is, what are your needs based upon bedrooms, bathrooms, square footage, layout configurations, proximity to work, school activities, those kind of things, what's going to be the best fit for your needs and your budget and your comfort level. We create a search portal for you to start honing in on what those properties are. And then we'll start going out looking at properties. And from there, you'll have the opportunity to make an offer on a property and start the purchasing process. From the purchasing process, that also involves multiple steps of inspections, like a home buyer's inspection, radon tests, sewer scopes. There's an appraisal piece to that. Certainly, your financial qualifications involving whether you're going to have a mortgage or if you're a cash buyer. There's a title component to that involving the title company to make sure that the title is free and clear to be, and then there's a piece of title insurance that's also involved to ensure that, that somebody else doesn't still own that home, that has a rights to own that home, that is not selling it. And that's where this team of Dave and Cathy, helping out with mortgage and helping out with financial advisement really kind of brings together like a full package along with your services, Christie, to ensure that the steps are all taken and for them to get through those hurdles and focused onto the next process and the next steps. Your services, Christie, certainly provide an opportunity for those divorced parties to have more dollar in their money or more money in their pockets for them to be able to use towards their home purchases rather than battling through attorneys and all the fees that go to that. So it's definitely when you can have an amicable divorce, certainly helps with the process of having more money in their pocket to use towards their down payments and reducing their mortgage amounts and those kind of things. So that's kind of a beautiful aspect of what this group of people kind of intertwined together provides and as a service to those parties. It's already a really trying time to separate yourself from somebody that obviously you don't get married with the thoughts of like, well, if this doesn't work out, I'll just throw it away, no problem. No, you marry somebody with the intent of spending your life with them, and that sometimes doesn't work out, and it's completely okay. It happens, but it's really nice to have a support system and a group of people to help you through those next steps and move on to the next phase of your life. And we love to help people make the best out of a situation that wasn't ideal and help them refocus and direct their attention to whatever the new possibilities of their lives are going to be.
Awesome, Ken. That's exactly it. Nobody gets married thinking they're going to get divorced, or they probably wouldn't get married, hopefully. Dave, how do you help people? Like, for instance, if they weren't able to qualify for the mortgage this time, for whatever reason, how do you help them be able to qualify for a mortgage, hopefully in the future?
Well, our philosophy at Rainbow Mortgage is we never say no, we just say not now. And so that just means that, right now in the mortgage business, so many of my peers, if you don't have perfect credit, they're not even going to talk to you because they have more work than they know what to do with. And I've never been that person, probably because of my military background. I'm always out there helping the lowest common denominator, so when my peers are picking the cherries off the top of the tree, I'm grabbing the ones that are a little bit, dilapidated on the ground or aren't quite perfect. And so we will definitely take a look at somebody's credit and their income and everything, and we'll let them know what it's going to take for them to be able to purchase or refinance the home down the road. We're not going to say no. We're just going to say not now. And then it's, then it's up to the client. We'll give them the best advice that we can so that they can work on it. And then it's up to them to go to work and try and get it done. A lot of times we'll provide just fantastic suggestions and ideas, and you follow up 6 months later and they're like, yeah, I haven't even started on that. And so some simple things like pay down a $600 credit card to $10. Believe it or not, sometimes paying it off all the way actually hurts your credit score. So, You pay it down to $10 and then your credit score will go up. How's that coming? Yeah, I haven't done that yet. Other than that, then that's kind of on them and not us. And then the other thing that we do that helps our divorce clients is we'll actually review the decree before they sign it. We're not attorneys, so we're not reading it for legalese or anything like that. What we're doing is we're making sure that the language in the decree supports their goal of home ownership, whether it to be to purchase or refinance. And like I said earlier, if the language on the number of support payments isn't right, that's gonna be an issue. If the debts aren't assigned right, that's gonna be an issue. I might have mentioned this last month. I caught one. Unfortunately, they didn't use my services to review it ahead of time. And the wife was supposed to get $70,000 as part of the refinance, and that was not included in the divorce decree. So luckily it was an amicable divorce, and the husband still agreed to pay it, but he could have been a nightmare for her and said, you signed it, it's not in here, I'm not paying it. Even though they had agreed to that as part of their settlement, somehow the attorneys missed it. And the only reason I caught it is because I had been talking with my client through the whole process. And I'm like, I looked at everything and I'm like, did you pay your wife the settlement out of some other money? Because I don't see the settlement in here anywhere. And he's like, no, it's not in here. I looked 3 times, and then he went back to his attorney and they're like, yep, we missed it. So it's good to have just a second set of eyes, take a look at things and maybe provide some, and I'm not perfect. I'm not saying I'm perfect. I've certainly missed things too in decrees that would have made everybody's life easier, because everybody does their decrees different. So somebody may put a piece of language in a decree where I'm not used to seeing it, because I go to certain specific sections and look at certain areas. And if they throw something about a car payment in a child support area, I'm not going to catch that. Just weird stuff like that. But that's how we help people. We don't say, we never say no, we just say not now. And we try and head off any challenges that might cause our clients issues down the road as soon as possible.
Wow, that is terrifying that they did not put in the provision about giving money, the 70,000 to the other spouse. That's just terrifying, because that could have been horrible. And then Cathy, how do you help folks post-divorce?
Post-divorce is where we can come in and help people make those big decisions, working with David and Ken. Is it time to buy a house? And really set up the budgets. That's when we look at, what is your current budget? What is your spending? How is that going to help you, obtain your goals, which may be a house, and also look at your retirement to make sure you stay within bounds so that you can someday retire at the time that you want to. So it's really about getting those budgets set up and getting those plans in place so that you can have a nice, clean picture to look at and understand, like, I can do this. You just went through a trying time and it's hard, and we want you to sit back and have that moment where you're gonna make it. So that's where we come in.
Yeah, actually, I was just talking, can't remember what group of people it was, or maybe it was just something I saw posted online about how a lot of people don't start the separation or divorce process because they don't know if they're going to financially make it. And so, make sure that you meet with your financial advisor ahead of time so that you can make it, and how you're going to make it, and like what you're going to have to do with your budget to make it. But then, afterwards, you need to carry out that plan. And, you can try to do it on your own, but there's definitely a reason that Cathy and other financial advisors have their jobs. And so I want to thank everybody for paying attention to us this beautiful afternoon here in Minnesota. It's kind of cold out, but it's still beautiful. It's sunny out. And I don't know about you guys, but that always makes me feel better. And very shortly, all of our contact information will be in the post for the video. And we all offer no cost initial consultations. And so we can, give you some direction and so that you know what to expect with the divorce or separation process. And thanks very much to Cathy, Dave, and Ken as well.
Thank you.
Thank you.